A successful transition relies on many things, but an essential component is transparency, especially throughout the entire value chain.
The first level is at the company level, where we have company scorecards rated by Sustainalytics, as well as by our consultant ERM, where every year they're doing a carbon footprint study. They are tracking all the sustainability KPIs for us, and that's how we hold ourselves at the company level. But what is more interesting is at the technical level. We are going to require our suppliers to conform to a certain code of conduct as it relates to ESG standards, because it matters for our scope 3. Some of them don't have the expertise or the resources to do so. We said, don't worry about it. GRP is here to assist you on your journey. Bring the suppliers on board, and then on the other end, we are then going to ask our customers and educate them what going green means.
Of course, GRP is just one player in the wider steel industry, so it will take meaningful change from all stakeholders to achieve sustainability.
The government, Ministry of Industry, Ministry of Trade, the National Chamber of Industry and Trade, including the subject matter expert, form a forum group discussion. Basically, they want to set green industry standards in Indonesia. So we are us as the industry player, how to calculate this kind of green standards. So meaning to say, they involve the steel player to accelerate this green standard in Indonesia.
Going back to where it all began for GRP, I caught up with members of the founding family. Pak Tony, if we can start with you. GRP is now owned by families, managed by professionals. You went public in 2019. Tell us how this journey towards a low-carbon future and greening the steel industry started, because it's a fascinating story.
Yes. So what's interesting is that in 1970s, when our founders started the first steel mill in Medan, North Sumatra, they found that it's very difficult to get good quality steel. So that's why this is where they see the gap. And in 1987, they started the first structural steel mill in Southeast Asia, here in Cibitung, West Java. So from there, we started to transition towards more products for steel, and finally, we see there's a demand in this decarbonization, which is what we are trying to do now for this ESG program that we have already started.
And Pak Kim, if I can turn to you, many companies see the greening of the process as necessary but costly. Some are even slipping on their net zero targets. What makes GRP different?
I think, it's about perspective for us. When we first chanced upon ESG issue, it started off also as a cost base, meaning that we view it as a risk. We view that if we don't go green, we don't produce green steel, go towards green steel in the future, we don't have a net zero plan, we'll be left stranded. So we started to look at carbon tax as a future cost in our business. And as we gather and recruit more team, who understand this issue, we study really hard, and we start to find out that this could actually be the window of growth for our future. So to produce green steel, to take advantage of the gap, like what Tony just said, to supply green steel, which is very rare in the market right now, and with a growing demand in Europe, in the developed countries, in America in the future, this is a true opportunity for the steel industry. So it's perspective. It could be a risk, it could be an additional cost, but if you put the right people in place and you have the right perspective, right attitude, protect the environment, it could do good for the business as well.
Many companies only see the short term and they postpone and delay that transition until the last moment, until there is a stick in the form of a carbon tax or whatever it may be. And yet you have talked about this transition in terms of survival and in terms of you don't want the business and your product to be stranded. That's in very stark terms. It's very interesting. Can you explain to me what you mean by that?
Our view on business is business is war. We go to war every day. We have steel industry is a very high capex and very competitive industry. Right? We have China producing more than 50% of the world's steel. They dominate across all sectors. And to counter that, you need to constantly innovate. You need to constantly look for that gap. So we believe that, especially in the steel industry, you cannot be short-term. Because the investment you make, you will probably make it back only 5 years, 8 years later. You have to think a bit more long-term here.
What made you decide to get people from outside the family and into work in a more professionally managed structure?
The motivation here is about survival. It's about increasing profit margin. When we were first given the mandate in 2019, we felt that the company has lost focus. Right? The company's focus should be only about a few basic things, really. It's about people, it's about margin, right? It's about time. So we felt that the company has lost focus. It needs to reinvent itself, put in the new set of professionals, right? Take out family vested interests, get the right people, and we spent a lot of time doing that.
How supportive are your shareholders to what you are doing? Because you're accountable to them.
Yes.
They want to see a rate of return. And as you mentioned, they are seeing a rate of return, but it does require a lot of cash and a lot of investment, a lot of capex to fuel this green transition. Are your shareholders on board with what you are doing?
I would say most of our shareholders are on board. Because of the change, some of the shareholders were a bit bruised. The ego was a bit bruised. But I think over time, they have definitely seen the results on our bottom line. And the green change, the ESG is now coming online. And I think very quickly they will see the benefits that we get.
I know that the steel industry is beholden to the economic cycles. What's the strategy if later on, let's say, China comes booming back, steel demand goes through the roof again, prices go through the roof, and there's pressure on you to go back to the old ways, to fire up that blast furnace and just crank out the material to meet that demand? What happens in that scenario?
You're putting him on the spot here. Well, I think we are not going to turn back. Right? We believe the journey we took, the result we had, the people that we recruited is based on this mindset. Can you imagine if we turn it back, how many of the team members are we going to lose? You don't have the people, you don't have time, you cannot do anything. And talking about cycle, I can't predict cycle. But one thing that our experience from 20 plus years working experience is cycle. It's just a timeline, it's 8-year, 10-year cycle. But eventually it harmonizes. What we have to pay attention is not the short-term trend. I don't look at short-term trend. For me, it's more of a 5-year, 10-year timeline. What are the policies that's going to be in place? What do we have to do to ride that wave?
Brought to you by Petronas.